No, I think it's usually high expectations, and the fact that they only met Azure growth rates, which was 38%. I think that's probably weighing on the stock because one would have expected them to blow out that number. It has been around 39% the last couple of quarters, so I think that's where a little disappointment could be. But that could also be because of supply constraints. That's something we have highlighted in our research before. But if you look at some of the other numbers, such as RPO, you mentioned above 600 billion, that's very impressive, and we already know the capex was going to go up. So I think in tandem, that's the only number that sticks out that they didn't beat by a decent amount.
All right. So then, I don't know, what do we want to dig into a little bit more deeper? It says Microsoft's quarter includes net gains from investments in OpenAI. Are we going to get a little bit more of a picture about that and what's going on there?
I think the question I have is, there's a big number that, that 600 plus billion RPO you mentioned. There is a large portion of that comes from OpenAI. So the big question is, how is OpenAI going to fund this thing? Do they have the capital to actually fund, let's say, a $200 plus billion commitment? But other than that, what are other clients spending that are not OpenAI? And, how is that business going? And if that wasn't the case, how should we look at Azure growth in the coming quarters? I think those are the big questions that we need answered right now.
I don't remember where I saw this. I don't remember if it was on our program yesterday. I think my brain is mush. I'm sorry, Anarug, but
what was it?
It was all about Claude from Anthropic competing with Copilot, and Claude offering products and services at a fraction of the cost or even free versus what companies are paying for when it comes to Microsoft Copilot. How big of a threat is that?
Oh, actually, to be very honest, right now, the entire software sector has been absolute under threat because of a lot of what you are mentioning, whether it's cloud or whether it's OpenAI tools or whether it's open source. Look at the valuations of software companies. They've been completely destroyed over the last 6 to 9 months. And a large portion of that is driven by what you just said.
So interesting.
Well, yeah. So is it in flux still, safe to say, Anurag, in terms of who ultimately are going to be the leaders when it comes to this AI world, or will there be multiple big players?
So we are absolutely in flux right now as to who will own the final product. And that's partially the reason when you have these valuations go all over the place. But I would comfortably say when it comes to somebody like a Microsoft's cloud portfolio or Amazon's cloud portfolio or Google's cloud revenue, I think these three companies will dictate a large portion of that market share just because they have the capital to do it. They have massive market shares and they have also the distribution. So these three, I think, will remain the way it is. The rest of the industry will shift around. We still think software has a place in this world, and there will be some damage, but it's not going to get completely blown up. And then let's see how that shapes up.
What's the damage that we'll see in your view? What's your prediction?
So if you are just selling a tool out there in the public to an enterprise or a small business, you may not get the same kind of premium that you were before. Remember, software a business with 80-90% gross margin business, but if you can spin some of that code up, using wipe coding or internally, you may not need some of those tools out there. Now, we think, at least on the enterprise side, having a core system of record, something like, the one that's sold by SAP or a Workday, they're far more important, and people are not going to rip them apart and use wipe coding tools internally out there. But if you are a visualization software or some kind of connector in between, you may not need to have that software. So there is a lot that's going to happen over the next 3 to 5 years.
Interestingly, looking at Microsoft Meta this year and last year, how the stocks have done. They've definitely underperformed some of the other Mag 7 names and certainly some of the other large cap tech names. But I'm just curious, the concerns have been about the AI spend and whether it's going to pay off. Signs here from Microsoft, Anurag, that you're seeing that it does make sense. This spend that Microsoft is doing, the ROI is there.
Yeah, for Microsoft, it's definitely there. I would say the long-term hang-up is, what happens when the OpenAI relationship breaks through, or goes away. That's the only big risk for Microsoft in the long run. They'll have to figure out their own LLM by then. But other than that, their cloud infrastructure product is pretty good, and, it's gaining market share. And according to our calculations, it will overtake Amazon in the next, let's say 3 odd years or so.
Anurag, do they really have to figure out their own LLM? How much of OpenAI do they own?
But it just doesn't matter if they own or not because they have the IP rights only till I think it's 2032, one of those years. And after that, they can't use those models after that. So remember that part of it as well. Not the financial part will stay, but it's the actual engine that is driving Copilot, that's driving GitHub Copilot or the Microsoft 365 Copilot that you talk about. That's the intelligence that goes into that model.
How do you do that? How do you do that from just a resources perspective if you have spent so many billions of dollars supporting OpenAI and ChatGPT?
Well, they have their own models that are going on. It's just not as good as whether it's OpenAI or Claude at this point, but they are putting a lot of effort behind it, and Mustafa leads that. And that's where we need to see what kind of ROI do we see there, and do they actually get their act together over the next few years.
All right, I want to go over to IBM, which actually outperformed Microsoft last year. It was up about 35%, and we are seeing this stock up about 8.4% following its earnings release here. They post revenue that topped estimates. They talked about software gains, specifically its software unit revenue up 12% to $19.7 billion in the fourth quarter. Software business jumping 14% to just over $9 billion. And the company projecting that revenue will grow more than 5% this year. And the company's CEO saying, quote, "We enter 2026 with momentum and in a position of strength." I don't know if you've had a chance to look at IBM, Anarug. Walk us through what we're seeing with this company.
Yeah, I was a bit surprised actually, the 9% number on the software side. It is a bit shocking. I mean, for them to be, total growth rate of 9% and software in double digits. I mean, we were not expecting that. So there's a lot to peel in that particular one and go back and see, which segments outperformed. Now, there's a tiny bit of M&A there, but even without that, I mean, I think this is very good. And the big number for us is that the cash flow is going to go up by $1 billion next year. So I think IBM's turned them around very well. I think the strategy is executing well, and Arvind's done a good job in this case.
The acquisitions, Red Hat, HashiCorp, Confluent, that's a big part of the spend. Is that like looking to sort of what Salesforce has done in recent years, growing through these acquisitions?
I think there's nothing wrong in growing through acquisitions if you don't pay enough for them, if you pay the right amount. And in this case, for IBM, every 2 years, they'd go out and buy something that would help their gross margins, that would help their adjusted EBITDA, that would help their free cash flow, and they use that cash flow to buy more. But they're already concentrated in certain areas, such as hybrid cloud or the ability to, make sure that the internal IT infrastructure of a company or the enterprises is something that they have a good handle on. And I think they're executing it very well.
Listen, their bookings for their AI business at IBM exceeded $12.5 billion since mid-2023. That's an increase from the $9.5 billion disclosed during its prior earnings report. A bit more than 80% of the bookings come from the consulting unit, with the rest in software, according to the CFO in an interview. Their AI exposure, I mean, this is something that has been, I think, helping the long struggling consulting division. So are we seeing improvement?
But the consulting division only grew up 1%. So even though they are getting a lot of that, as you said, 80% of those bookings from consulting, it's not driving the entire division up, because as we know from some of the other vendors, and we'll find out today also, the non-AI IT spending is pretty bad right now throughout the ecosystem. So people are cutting back on that and deploying those funds into AI-related services, and that's something that's hurting IBM as well. But imagine, even with consulting growing only 1%, their total company growth rate was 9%, and I think that's something to be proud of.